Today I'm gonna go over the two trades that I took in the previous 2 days. These trades, like any other trades that I take, are based on liquidity concepts. I just keep posting these daily videos about trades that I take because I feel like it's the easiest way for people to see what's the mindset behind my trades and actually understand how liquidity works. All this information is for free. I hope you guys can gain some knowledge from this. If you have any questions, leave it in the comments and stuff like that. So let's get to the video. If you watched my previous video, I took a short on Bitcoin from somewhere here, I don't really remember, until here. And after we went and swept that internal liquidity, we shoot up. Now, as soon as we have some new price action, I always try to locate where is the next liquidity levels. So as you can see here, we made this relatively equal highs and we started pushing down. So now at that moment I knew, okay, I have relatively equal highs at the top of the range and then I have a lot of liquidity down there. Why am I saying I have a lot of liquidity there? Because there was this order block here that we reacted multiple times off of. And as you can see, we had some internal sweeps here, like this price action swept this area here, then this swept this area here. But overall, this order block here held a lot of liquidity below it. And to be more precise, the bottom of this range had liquidity below it. So now we pushed up and we swept this internal liquidity here. Now I was looking for a shorts here. To be honest, this was not ideal setup. And why am I saying that? Because there was this area here, or this high here, that was not taken. Usually before I take a trade, I like to see all the liquidity being swept. This was just one level of liquidity swept and the other one was left there. But why I still was looking for shorts? Because this high here was actually the top of the London session. So when the New York opened, it swept the London high and it started pushing down. And that kind of gave me confirmation and confidence to try looking for a short, sorry. And we started pushing down. And then when we pushed down, we made this order block here. And that alone gave me enough confidence because as you can see here, when we were pushing up, we kind of made order blocks here. Now when we're going to the opposite direction, we kind of made another order block, but in the opposite direction, which kind of means that now sellers are like marking the buyer's territory. So what was buyer's territory before, now the sellers are marking it as their territory. And then we had this big bearish candle here. After that big bearish candle, I was looking for this candle to push up to give me a little bit of retracement, and then I placed my short here. My stop loss was above this order block here, and my TP was at this level here. Why did I choose this level here? I chose this level because there is an order block on this range that we made. As you can see, there is like, it looks very messy, but if you go to like a higher time frame, you will see it's like a clear order block. Exactly. So I was targeting that level there. Let me go back. And as you can see, the next candle, after I opened the trade, came back to this fair value gap that was made there already, and it started pushing down, and I reached the TP. So now if you see this here, in this example, we didn't touch the order block there. I was actually worried because I saw a chart here and I saw that we didn't touch it there, but I luckily got filled on my MT5, because if you go here on a different Bitcoin chart, let's see this one for example, yeah, you will see that we got filled here. So I don't like that about Bitcoin because I think different brokers have different price levels. Like here you got like proper touch on the area that I marked, but here you didn't. But what's important for me is that my order got filled and I reached my TP. Now the second trade that I'm going to talk about is the gold long that I took today. But first of all, I want to mention the short that I actually exit too early, and I'm so pissed about it because it was such a good trade. Basically, I was targeting this liquidity on the bottom here, and I entered trade somewhere around there. I opened short here, but for some reason I was scared from this wick here, because I saw this wick and I was like, we might react off of 50%, because we swept some internal liquidity, and then I'm not really willing to lose that much money because my stop loss was huge. Like, for me this is too much money for a stop loss. So when I saw this reaction here, I just closed the trade here, and then after literally as soon as I closed, the trade started like dumping, and it reached this TP that I had eventually. And this green box here that I marked is the fair value gap on a daily. That's why I was so confident that the trade is gonna go in that direction, which is also very important why you should mark the proper liquidity levels, because as soon as you know the liquidity levels, I think you did half of the job. Now sometimes you're gonna have liquidity to the upside, sometimes you're gonna have liquidity to the downside, but if you catch the right direction, you can catch a really good trades. So as I said, unfortunately I missed that short. I closed it too early, and then what I was doing, I was looking for the reaction when we sweep this liquidity here, because as I said, we were reaching the fair value gap on a daily. So now what happened today is that we came to this level here, and then I marked this fair value gap here, boom, and then as you can see, we reached that fair value gap and we started rejecting. Now when we started rejecting, I left the chart. I didn't really check the phone that much, and the next time I checked the phone, we were already here. So when we were already here, I marked this fair value gap here because it's very obvious. Sometimes when you have multiple fair value gaps, I like to mark the very obvious one. Of course, you can mark all of them, or you can mark each one of them separately. I don't think there is a proper rule for that, because I see online everybody's doing different. For me, I just really mark the one that looks very obvious, because people are gonna short from there. Like, people are gonna short rather from here than from here, although this is a fair value gap. So as you can see here, when we reached that fair value gap, I was looking for the reaction. So let me go to the bar replay here so you can see. So we reached to that point. I was already pissed because I don't really like opening the trades when they're already far from changing state of delivery, because you can see here, this was changing state of delivery. So if I was on a chart, I would open trade here. But since I wasn't there, I had to wait for the second opportunity, or for the next opportunity. So we went there, boom, and we had this reaction there. So I went to the 5 minute, and I was like, let me see what's happening here. So I marked this obvious level of liquidity here, this internal liquidity, and I was trying to see what's going to happen. Because as I said, this fair value gap here is obvious. So if we manage to close above it, I'm going to be very confident that we're going to go higher. So we had some consolidation here, and we pushed up, as you can see, and then boom, we came back down and we swept some internal liquidity. Now again, this is not the perfect situation, because for me, I would prefer that we swept this level of liquidity. But I was like, okay, let's see what's gonna happen, and I'm still open for long. And then I waited for 2 more candles, and as you can see, we started making some fair value gaps here, and eventually we managed to close above it. Boom. Now when this candle opened here, I opened long here, boom. My stop loss was below this level here. Now for the take profit, to be honest, I really didn't have a target, because as you can see, there is no obvious target of liquidity there. Like, there are some equal highs here, for example, and some fair value gaps and stuff, but I didn't really have a proper TP, to be honest. So at this time, I just opened trade, I put my stop loss, and I was like, let's see how the trade goes. And I opened the trade and I went for a football game. When I checked my phone first, I was already in a profit, like the price was somewhere there. And then I went for a football game again. I didn't move my stop loss, it was still there. And then boom, when I came back from the game, I already reached 1 to 4. So let me see, 1 to 4, this is 1 to 3. So I reached somewhere there, whatever. And then when I saw that we are in this area, I just saw we reacted off of this order block here. So yeah, like this, and boom, this is where I closed it. Very nice trade for today. I usually do 1 to 2, sometimes 1 to 3. This is 1 to 4 point something, so I was super happy about it. So as you can see, we pushed up. We had a little retracement. I didn't see that because I was on a football game, which is even better because I didn't get stressed. And then we started pushing up, boom, 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 and then I closed my position somewhere there, actually, lying, because I saw this candle, and then boom, I closed it here. Now the trade went even more bullish, as you can see, because again, there was not really level of liquidity that I could take, but I didn't want to go for 1 to 2 because I knew that this can go a lot. So I was like, okay, when I reached 1 to 2, 1 to 4, I was like, I'm gonna close the trade. So I hope that you enjoyed this video. Today is Friday, so the market is gonna be closed for tomorrow. Bitcoin is gonna be open, so let's see, maybe there's gonna be some trades there. But I hope that you enjoyed this video. If you have any questions, please leave it in the comments. And yeah, have a nice day.